Our first topic is on the worksheet. This happens to be one of my favorite topics, and I think it's very easy to complete. The worksheet is usually created in Microsoft Excel. This is not a required report or a required step in the accounting process. However, it is useful. Out of the many business clients I have at the accounting firm, we only create worksheets for about 3 clients because they have very complicated entries. The worksheet aids us in preparing the financial statements and any interim statements. Remember, interim statements are usually the quarterly or monthly reports. We will actually be creating financial statement columns on the worksheet, and you can see what they look like before we prepare them. The worksheet will show the effects of adjusting entries and links the accounts together on one document, making it easier to identify issues and also easier to identify any errors. This is what the worksheet looks like. We briefly discussed some of this at the end of chapter 3, so some of this may look familiar. First, you want to list all your general ledger accounts along with their balances from the trial balance. Debits should equal credits, and if it does not, then there is an error on your trial balance. Next, you want to input all of your adjusting entries. This worksheet can be prepared before you actually input the adjusting entries onto your books. This way, if there is a mistake, you can correct it before making the entry. Debits also equal credits here, and if not, then there is a mistake in the adjusting entries. After the adjusting entries have been inputted, you want to update the trial balance to include all the adjustments that were made. This is called the adjusted trial balance, and this is where we left off with on chapter 3. What we are going to do next is use the new updated balances from the adjusted trial balance and create the financial statements. All of the income statement accounts will go on the income statement columns. This would be the revenues and expenses. Initially, debits and credits do not equal. The difference between the columns would be the amount of net income. You will include net income on the worksheet in order for the debit and credit columns to equal. Don't worry, this is pretty easy to do. Finally, the last columns would be the balance sheet accounts. This would be your assets, liabilities, and equity accounts. You would also include the capital and the withdrawals here as part of equity. Once again, the debit and credit columns do not initially equal. The difference is also the amount of net income. You will include this amount in order for both columns to equal. We'll practice this next. This is problem number 1 on your classwork. Complete the worksheet by extending the account balances into the appropriate financial statement columns and by entering the amount of net income for the reporting period. As you can see, some of this worksheet is filled in for you already. The trial balance column is filled in and the adjustments column is filled in. I did this because we already covered adjusting entries last chapter, and I do not want to repeat that lesson. For now, I just want you to get comfortable with the process of filling this in. We first need to update the trial balance with the adjusting entries to give us the adjusted trial balance. You need to go line by line. If there is no adjusting entry, then the amount does not change. For instance, on the unadjusted or regular trial balance, we have cash of $5,000. There are no adjustments, which means we just copy this $5,000 over to the adjusted trial balance columns. It's a debit here, so we keep it as a debit. For accounts receivable, there is a $20,000 debit and a $2,000 debit. There is an adjustment, and we do need to update this amount. The rule is if they're on the same side, you add. We have a debit and another debit, which makes a bigger debit. We'll add these two numbers together. 20,000 plus 2,000 will equal 22,000. Next, we have trucks, a $40,000 debit. No adjustments, therefore we keep the $40,000 as is. For accumulated depreciation, there is a $20,000 credit and a $4,000 credit. Remember, we add the same sides. A credit plus a credit makes a bigger credit. 20,000 plus 4,000 will equal 24,000. The next few, there are no adjusting entries for, so we'll keep the 15,000 as is, the 10,000 as is, and the 15,000 as is. Now for fees earned, there is a credit and another credit. Two credits we add, we get 51,000 as a credit. Next we have depreciation expense, a $6,000 debit and a $4,000 debit. We add them to get a $10,000 debit. For rent expense, there are no adjusting entries, therefore we just carry it over as is. Now, I know for all these examples we add it, but if there was, let's say, a $20,000 debit here and a $2,000 credit, a debit and a credit are on opposite sides, you would subtract and then keep the number on the higher side. After we filled in the adjusted trial balance, we add the debit side and we add the credit side. They should equal, otherwise there's an issue. When I add up the debits, I get 100,000. When I add up the credits, I get 100,000 as well. They equal, we're happy, and we move on. Now we have to fill in the financial statement columns. We have the income statement and the balance sheet. It's very important to know which accounts go on these two statements. The income statement would be the revenues and the expenses. If you look, the revenues start here, fees earned. We have depreciation expense and rent expense. These are the only items that will go on the income statement, the revenues and the expenses. We use the updated numbers we just had, and we're going to copy it over as is. The 51,000 as a credit, we keep it as a credit. The 10,000 and the 8,000, we also carry over. That's all that goes on the income statement. Now we add both columns up and they should not initially equal. When we add up the debits, we get 18,000. When we add up the credits, we get 51,000. They don't equal because this is our revenues and this here are our expenses. They shouldn't equal, and if they do, it means you didn't make any money and you broke even. In this case, we did make money. Our revenues are higher than our expenses. They don't equal, the difference is our net income. What we do here is we subtract these two numbers and then put that number on the smaller side. When I subtract the two numbers, I get 33,000. And like I said, you put it on the smaller side because now when you add them up, 18,000 plus 33,000, you get 51,000. And then you just bring this 51,000 down, and now they do equal in the end. So even though they don't initially equal, you do make them equal at the end. It's kind of like plugging in income and forcing the columns to equal. If you accidentally put the 33,000 on the wrong side, on the credit side, you will see that they don't equal at the end, and that would be a red flag to maybe move it to the other side. Now let's do the balance sheet column. We're going to use all the accounts we did not use on the income statement. It would be the assets, liabilities, and equity accounts. Basically, where we cut off here at fees earned, everything above that will be on the balance sheet. The $5,000 as a debit will stay as a $5,000 debit. The $22,000 debit will stay as a $22,000 debit. The $40,000, the $40,000. Then we have some credits, $24,000, the $15,000, and the $10,000. Lastly, we have the withdrawals, which is a $15,000 debit. As you can see, each account is used on exactly one statement, not on both and not on zero, but exactly one. Do not duplicate any of these and do not skip any. Let's add up the debits. We get 82,000. When we add the credits, we get 49,000. Once again, they do not initially match. Subtract to find the difference, and that should be 33,000. And we get 33,000. If you get a number other than the net income, then something is not correct. You would have to go back and check your numbers because these amounts would need to equal. Once again, we do put it on the lower side, so then when we add it up, we get 82,000 and 82,000. Now they equal at the end. And that's the worksheet. Like I said, I don't do many of these for clients, but I do want to show you a quick example. Here's an example worksheet I created for one of my clients. I did take their name off, so you don't know who they are. Because this is for internal purposes, it might be set up a little differently than when I just showed you. But we do have the preliminary trial balance, our adjustments, and then the adjusted trial balance. And it works the same way as I just showed you. I don't have the financial statement accounts because I do include that information at the end. It looks a little complicated, but I did just want to let you know that this is something that we do use in the real world.